Hi, good morning, guys, everybody. Today is the 2nd of June, 2025, CRAZII Market Talk with KEL. All right, guys, I got a bit better. I've been doing a bit of exercise and I've been drinking a lot of water. So, guys, the flu virus is going everywhere. Several of my friends are all down. Some are down quite badly. So, drink a lot of water, a lot of vitamin C's, and of course, if you can have some supplement, it'll be good. Contact Susan. All right, Susan is involved in some health supplement products. Contact her. I'm pretty sure she'll help you on this. Or she helped me quite a fair bit with some of the things I had. All right, guys. So let's go into the market right now. Disclaimer apply as usual. Please do your risk management. And of course, after that as well, we will have the review of what happened on Friday, the gold market. Okay. All right. So let's start the market right now with the general market first. Okay. General market. Yeah. Okay. Give me a moment. On. Okay. So this is the chart that I have using this trading view. Okay. Now this chart basically tells me since 1969, the recession period versus the unemployment numbers. Okay. So let's take a look over here. They have only until 1969. So I'll show you how does it work. Okay. So basically you look at the chart now, you take a look. Okay. Hold on. Okay, so this is the start of the recession back in 1969 or 70, and this is where it ended. Okay, this is how you see the chart. So what you can see that the blue line, the blue chart is showing you the unemployment data. Okay, so you can see now, oops, you can see that. Let me get a bit bigger. Okay, so you can see that once the unemployment numbers start to creep out, right? Is always the start of the recession. Okay, can you see that? So every time the number, so you can see at the start, right, it's all going downwards first. But once you see it start to creep up, right, that's the start of recession. So you can see that it's coming down. It was coming down. Can you see that? Yeah? Okay, got an idea now? Okay, cool. So I'll make a bit different color to make it easier for you to understand. So you take orange color that's coming down. Okay, but when it turns, okay, orange coming down, you can see that economy is going to do very well when the unemployment data start to come down, right? So that is where the market bottom is. Then if the market start to go up instead, now that is where you see the recession starts. So guys, tell me in your opinion, do you think that recession has started, or because we purposely push it back, or we know it's happening, but we just, close two eyes on this as well? Let me know. What do you think? Do you think recession has already started? Yes or no? Please key in the comment box right now. Hmm? No answers? No yes or no? Okay, only Nigel came up with a yes, question mark. Okay, so you notice that the thing is that we human being has this interesting way of looking at things. Despite the fact is that it happened since 1969, which is already like 50 years ago, until to date, we have seen through how many recessions? Let's take a look. We have went through 1, 2, 3, 4, 5, 6, 7, 8. 8 recession. And 8 recession clearly shows the same dynamic, which is that you have a downward trend on the unemployment data, which is what you saw earlier, whereby this happened. And then after that, you will see a recovery, like what you saw right now, the last few months. But yet we see it, but we still don't believe it. So when do we really get to see this type of action translate to reality? Is when the stock market pump start to come down. So now let's rewind the clock a little bit. Why Warren Buffett has been selling his shares to now $321 billion in his pot, waiting to exercise within the next 5 years. So blatantly, he's already telling you that there is a very high chance there will be a recession coming in the next 5 years. So of course, you say, KEL, 5 years, ma. So it's like, oh, still a long time to go. But the thing is this, look at the chart. We are already more than halfway already. Look at the distance between them itself. Everyone, take a look. The distance for a recession is always about the halfway mark itself, right? Means from where the things start to pick up about halfway mark, you can see that happening. So already we are already more than halfway. Look at the box that I just draw. It's much longer than the rest I draw, right? So actually we already in one, but then because the stock market is at a high level, so you don't feel it. So now the thing is this, take my word for that. The moment the stock market really start to come down for whatever reason, the recession will kick in very, very fast. Then you see the numbers coming everywhere. Think about this. Doge have cut so many jobs already. Doge, right? There's a lot of companies already slashed down because of AI. So all these numbers are actually available, but why is it not in the market? And that is a question mark. So that's why now when Moody's cut US this thing itself, right? It definitely confirmed my fear that they actually know that what's happening. But because and again, there is no way that the current government or current this governance is not allowing things to happen, so they just sweep it under the rug. So anyway, I'm telling you, I'm just sharing with you that if the stock market do pull back itself, it's really nothing what they call unexpected. Okay, I'm just giving you my personal view at the moment right now. Trump is too proud to let it happen. I don't know. Okay, I cannot comment this, but I'm just telling you guys that recently some people were asking me about my general field of market, and I gave this chart to them. So I'm showing you today. Yesterday we talked about was the sum rule. Today I talk about the unemployment data. Yeah? It's a little bit more direct to the point. Okay, so let's look at the US Dow Jones now, everybody, to start off with the session, since we're going to rely on this to give a view. Okay, so first of all, today is the Dow Jones. Okay, the Dow Jones today got no pivot, yeah. Not as error, there's no pivot. This type of diagram got no pivot. Now, when there's no pivot, that means that OP, which is 42,107, will be a very, very important technical level. If the market chooses to go above the OP, it'll be a buy. If the market chooses to go below OP, it'll sell. It's as simple as that. Yeah, it's as simple as that. So one thing to note, right, today, for those who are believe that the market is bullish, my personal advice you to take profit only at 42,343. So that is your target for today. If you're a buyer, stick to that number. Because from the chart, this is the nearest number. Although MLP is nearer, but MLP is too close. So once MLP break 42176 break above, then the next number will be 42343. For people to buy, stick the number. Now, for people to sell, you can see that the lower number, which MA30, is 41,893. So we are actually also about 150 points away from this. Right, if the market stays below OP, 41,893 will be my target. Now, these two things, both of them are MA. So what will happen? If the market hit MA 200 and stays above it, the market will go up. All right, it will go past it. If it stays above it, it'll go up to the KCB here. But if the market breaks MA 30, then you come down to KCB here, and that's 41,587. Now, the market has been sideways for quite a while already, right? So in my personal opinion itself, right, I'm going to take my little bet to bet this guy here. Now, why is that so? Because you must understand 90 days itself is actually every day is calculating. And now with Euro, right, basically sounding out a retaliation. So which means that whatever happened last week about they coming to Donald Trump and telling them to do this about this 9th of July thingy, whatever happened there is like no longer exists. And Donald Trump to hit that with the 25% steel tariff, right? It's ridiculous again because it hit Europe quite badly because a lot of steel come from Europe side. So again, all these things tells me that there's no way if the Euro are so what they call amicable with the USA, and yet Donald Trump can do this, and the retaliation came from Europe at the same time, then I can 100% tell you that there's no way China has any way to work with US already. Very sure. You understand? It's that you're two neighbors, all right? Both of them not happy with you, but one is still a bit closer. The closer neighbor can't talk to you anymore after a lot of argument. Do you think the one that's further away will be better with you? Impossible, right? Okay, second thing is now recently Jamie Dimon, as you know, he's a JP Morgan CEO, right? He has been very vocal. Now, I mean, I've been following Jamie Dimon for a while, but and I know that he sometimes not that accurate. But recently he said that he went to China. Yeah, he said he went to China, talked to the people there, and it's very clear the Chinese are not going to budge. So if Jamie Dimon saying in a conference with hundreds of people around and now whole world listening to what he's saying, then I think that is really the one that strike into it. And again, plus Warren Buffett selling shares and people all getting out, bond market not performing. To me, that the worst thing to happen is that something catastrophic to happen, whether it's Mother Nature or God send, right? This will crack the whole US market. All right. So this is my personal view itself. I leave it to you to decide. But since the MA is coming together, technically speaking, we are now at the type of cross whereby the both MA cross each other, and unfortunately the long-term one is on top of us. So it's actually a bearish signal. Yeah. Okay. Take note of that. All clear? If all clear, press number 1 right now. This is not Ribena. This is actually a supplement drink that Susan passed it to me. All right, pretty good for morning chop, giving me energy. All right. Okay, let's look at this gold today. Gold is very interesting, everyone. Gold, we have KSI, greed, but market down, right? So that's why this morning I tell you it could be a potential elephant trade. Now, why do you use the word potential and not elephant trade? Because the market haven't break the previous high. The previous high is here. We should give you 3318. Okay, 3318. So unless gold breaks above 3318, then the whole thing will change to an elephant trade. So this morning, the high was 3316, purposely hit down there and then pull back. So what do I expect? Well, I will want the gold to go up because I'm long, okay? But the thing is this, if it stays around here, it's fine because that means you're giving a third day compression. So if there's going to be a breakout someday, that'll be good, okay? So where would the gold be going? Now, let's take a look at here as well. One thing to know that gold, we have already a U-turn. The low have been established. The low of previous day is getting higher. So that's exactly what usually happen. And then you can see that you will have the inside bar, which is the bar going inside, which now we are actually seeing. So we are actually pretty close to a potential breakout soon. Okay, and how high will it go, right? Usually it will take out the technical level of the highs available. So it's either this one here or this one here itself. So both of them tells me that gold has a good chance to go up. Okay, both of them tell me gold have a good chance to go up. So how high will it be going? We'll think about this point, and I'll think about this point here itself. Okay, so I'm gonna see 3331 and 3365. Okay, 3365. I'll write down for you 3365 and 3331. I think that gold will be heading toward this two level if the buying continue to move higher. Yeah. So watch out for these two numbers later on in this week itself. All clear? If all clear, press number 2 right now. Okay. All right. But still, again, as long as the market don't break up and break the previous high, there's no way the elephant trade will kick in. Yeah. So don't jump the gun and buy now and think, oh, since KEL, it should go up already, right? And buy it cheap. That's not the way to arrive it. Yeah. That's not the right way. Yeah. Okay. All right. So let's look at the next market before we go to the second session. Okay. And that will be on the Canadian dollar that Iman loves. Let's take a look. Now, this is the Canadian dollar as we have been talking about. Okay, this is the movement, and you can see how beautiful is this elephant trade already. You see that? So last week itself, right, someone asked me, KEL, isn't this an elephant trade? I said, yes, of course. The market went up, right? And then after that, the KSI stays red. The KCX also stays blue. So once the market breaks the previous low, which is here, bang, the market will come down, right? So where will Canadian be going? Most likely it'll be here. So Canadian dollar most likely will travel down further and go down to this point here itself, which is about 1.3685. Okay, Canadian 1.3685. So for that to happen, the dollar has to pull back, right? Yeah, the dollar has to pull back. So if the dollar pull back, then obviously it's what will happen to the gold? The gold goes up. So actually it's all aligned properly already. All right, correct? So that is why I share with you the importance of such a trade. When you see such a trade in the market whereby the price goes up, but the KSI is red, I tell you it's very rewarding. Yeah, very rewarding. As long as you know how to play this game. So Those guys who saw my posting on the Telegram regarding the KSI, please read through once again. It took me some time to do the diagramming, and then after I come up with the wordings for you. I hope you can understand what I said. Okay, guys, we'll take a short break right now. We go in the second session for the revision side. So thank you very much.